Hello friends. In the last 12 months, Congress has made more changes to Social Security than it has made in the previous 10 years combined, and the majority of the 75 million Americans receiving benefits have no idea most of these changes happened. Some of these changes put money back in your pocket. Some of them are draining the fund that pays your check faster than at any point in the program's history. And one of them, if Congress does nothing before 2032, triggers an automatic cut to every single Social Security check in America with no vote, no warning, and no way to reverse it once it happens. Today I am going through every one of these changes in order of urgency, starting with the one that is already affecting checks right now and that almost nobody received a personal notice about. Before we get into it, subscribe to this channel right now and turn on the bell. Changes like these arrive without personal letters and without reminders. The people subscribed here find out while there is still time to act. Subscribe now and let's get into it. Change 1. On January 5, 2025, President Biden signed the Social Security Fairness Act into law, and by July 7, 2025, the Social Security Administration had already sent out 3.1 million payments totaling $17 billion to eligible recipients. $17 billion sent out in direct deposits to people who had been underpaid for decades, in many cases without ever knowing their check was being reduced. Here is what the Social Security Fairness Act actually did. For decades, two provisions in Social Security law were quietly cutting the benefits of millions of public sector workers, teachers, firefighters, police officers, government employees, people who had worked jobs that did not pay into Social Security, and also worked other jobs that did. The first provision was called the Windfall Elimination Provision, WEP. It reduced Social Security retirement benefits for workers who also received a pension from a job that did not pay into Social Security. The reduction could be as high as $587 per month. The second provision was called the Government Pension Offset, GPO. It reduced spousal and survivor benefits for people who received a government pension, in many cases eliminating the spousal or survivor benefit entirely. Both of these provisions are now eliminated. Gone. As of January 2025, if you worked in public service, or if you were married to, or were married to someone who did, and you have not contacted SSA to ask about your updated benefit amount, you may be leaving real money uncollected right now. The SSA completed the bulk of retroactive payments by July 2025, going back to January 2024. But not everyone received the full amount they are owed. Some beneficiaries received only 6 months of back pay instead of the full 12 months the law provides for. That if you are a surviving or divorced spouse of a public sector worker and you have not seen a full adjustment to your benefit, call SSA at 1-800-772-1213 and ask specifically about your retroactive eligibility under the Social Security Fairness Act. Use those exact words. Change 2. On July 4, 2025, President Trump signed the One Big Beautiful Bill into law, and buried inside that bill was a provision that directly affects how much federal income tax you pay on your Social Security benefit, starting with the 2025 tax year, meaning the taxes you filed in 2026. Americans who are 65 years old or older can claim an additional $6,000 deduction on their federal taxes. This is on top of the standard deduction that already exists. It is not a tax credit. It is a deduction, meaning it reduces the amount of your income that gets taxed, which in turn reduces how much of your Social Security benefit is subject to federal income tax. Here is who qualifies for the full $6,000 deduction. Single filers with a modified adjusted gross income up to $75,000 per year can claim the full amount. Married couples filing jointly with combined income up to $150,000 per year can claim the full amount. The deduction phases out for higher incomes. Single filers with income between $75,000 and $175,000 receive a reduced deduction. Married couples with income between $150,000 and and $50,000 receive a reduced deduction. Above those thresholds, the deduction disappears entirely, and the deduction runs through the 2028 tax year. It is not permanent. If Congress does not extend it, it expires. The action step for this change is simple. If you are 65 or older and you filed your 2025 taxes without claiming this deduction because your accountant was not aware of it or because you filed before fully understanding it, contact a tax professional about filing an amended return. Using Form 1040, the deadline to amend a federal tax return is generally 3 years from the original filing deadline, so you have time. But the sooner you act, the sooner any refund arrives. Change 3, and this is the one that should concern every single person watching this video, regardless of age, regardless of whether you are already receiving benefits or still working toward them. The 2026 Social Security Trustees Report, released in June 2026, projects that the OSI Trust Fund, the fund that pays retirement and survivor benefits to 71 million Americans, will be depleted by 2032. When that fund runs out, under current law, Social Security does not stop, but every check gets cut automatically by 22%. Not a vote, not a decision. An automatic mathematical consequence built into the law as it currently stands. For the average beneficiary currently receiving $2,071 per month, a 22% cut means losing $456 every single month. Every month. Permanently. Until Congress acts. And here is what makes the 2026 report different from every previous warning. The insolvency date has not improved. It has gotten worse. The Congressional Budget Office updated its projections in February 2026, showing the combined OASDI fund depleted by 2034 and the separate OASI retirement fund depleted as early as 2032. Why is it getting worse? Because the two laws Congress passed in the past 12 months, the Social Security Fairness Act and the One Big Beautiful Bill, both increased benefits or reduced tax revenue going into the fund without adding any new money to cover the difference. The Social Security Fairness Act cost the trust fund an estimated $196 billion over 10 years. The $6,000 senior deduction in the One Big Beautiful Bill will cost an additional $168.6 billion in lost tax revenue over the next decade and hasten the depletion date by up to 6 months. In plain language, Congress gave seniors money with one hand and moved the clock forward on the cut that affects everyone with the other hand. Both things are true. At the same time, right now in Washington, 3 proposals are actively being debated. The first is the 6-figure limit, a plan that would cap Social Security benefits at $100,000 per year for couples and $50,000 for single retirees. Senator Lindsey Graham has publicly supported this approach. The second proposal is to raise or eliminate the payroll tax cap, currently set at $184,500 in 2026, so that higher earners pay Social Security taxes on more of their income. The third proposal is bipartisan from Senators Bill Cassidy and Tim Kaine and would borrow $1.5 trillion to create a government investment fund, using the returns to help sustain Social Security payments going forward. None of these proposals have passed. None are law today. The 2032 depletion date is real. The automatic 22% cut is real. And the senators who will be elected in November 2026 will be the ones required to vote on Social Security reform during their 6-year term or stand by and watch the cut happen automatically. Change 4. In 2026, the full retirement age is now 67 for everyone born in 1960 or later. This is no longer a phase-in. It is complete. 67 is the age at which you collect your full unreduced benefit if you were born in 1960 or any year after. Claiming at 62 still cuts your monthly check by approximately 30%. That reduction is permanent. It does not go away when you reach 67. It stays with you for the rest of your life. The difference in lifetime income between claiming at 62 and waiting until 67 is not a small number. Using 2026 figures, the maximum benefit at 62 is $2,969 per month. The maximum benefit at 67 is $4,152 per month. That is $1,183 per month difference every month for the rest of your life. And if you wait until age 70, the maximum benefit reaches $5,181 per month because delayed retirement credits add 8% per year between 67 and 70. The Social Security Administration's redesigned online calculator launched as part of the July 2026 My Social Security portal update now shows you all three numbers at the same time. Your benefit at 62, your benefit at your full retirement age, and your benefit at 70, side by side on one screen. That if you have not logged in to see those three numbers for your specific situation, that is the single most important financial task you have this week. Go to ssa.gov/myaccount, log in or create a free account. Look at your retirement estimates section. Write down all three numbers. Change 5. The Social Security earnings limit in 2026 is $24,480 for anyone collecting benefits before their full retirement age. For every $2 you earn above that limit, SSA withholds $1 from your benefit. This is not a fine. It is not a penalty. The withheld money is not gone forever. When you reach full retirement age, SSA recalculates your benefit to give you credit for the months your benefit was withheld. But in the short term, it means your monthly check stops or shrinks if you earn too much. In the year you reach full retirement age, the limit jumps dramatically to $65,160 for the months before your birthday month. And once you pass your full retirement age, birthday, there is no earnings limit at all. You can earn any amount with no impact on your Social Security check. If you are working and collecting Social Security before your full retirement age, and you think you may be approaching the $24,480 limit this year, act now. Contact SSA and report your estimated annual earnings so they can adjust your withholding correctly before you receive an overpayment notice at the end of the year. Change 6. The Medicare Part B premium in 2026 is $202.90 per month, up from $185 in 2025. That $17.90 increase is automatically deducted from your Social Security check every month for the average beneficiary whose Social Security increased by $56 per month from the 2026 COLA. The Medicare premium increase took back $17.90 of that, leaving a net increase of approximately $38 per month, not $56. 38. If your income in 2024 was above $109,000 as a single filer or $218,000 as a married couple filing jointly, you are paying more than the standard $202 premium. You are in what is called the IRMAA bracket, and the surcharge can be as high as $594.50 per month. If your income has dropped significantly since 2024, because you retired, because a spouse died, because your business income changed, you can appeal your IRMAA surcharge using Form SSA 44. Call SSA at 1-800-77-21213 and ask specifically for a Medicare income-related monthly adjustment amount appeal. Now let me give you the complete action plan, because knowing what changed is only useful if you know exactly what to do about it. Action 1. If you worked in public service, or are married to or divorced from someone who did, call SSA at 1-800-772-1213 this week and ask specifically whether your benefit has been updated under the Social Security Fairness Act and whether you are owed any retroactive payment. Action 2. If you are 65 or older and you filed your 2025 federal taxes without claiming the $6,000 senior deduction, contact a tax professional about filing an amended return using Form 1040-X before the 3-year amendment window closes. Action 3. Log into ssa.gov/myaccount this week and look at your retirement benefit estimate at 62, at your full retirement age, and at 70. Write down all three numbers. Your claiming decision, which age you file, is the single largest financial decision of your retirement. Make it with the real numbers in front of you. Action 4. If you are working and collecting Social Security before full retirement age, check your year-to-date earnings right now and compare them to the $24,480 annual limit. If you are close to or above that number, contact SSA immediately to report your earnings. Action 5. Look at your Social Security benefit statement, either on paper or online at ssa.gov, and find the line that shows the Medicare Part B deduction. Confirm it matches the standard $202.90 premium. If it is higher, you are in an IRMA bracket, and you may be able to appeal it if your income has changed. And Action 6, the most important one, and the one that requires nothing more than attention. Stay informed as the Social Security Trust Fund debate develops through the 2026 election cycle. The senators elected in November 2026 will be the ones required to vote on this issue. Who they are and what they vote for will directly determine whether the 2032 automatic cut happens or does not happen. What Congress has already done affected your check without a personal letter. What Congress does next will affect your check the same way, quietly, automatically, and without calling you first. So here is the complete picture of everything Congress has done to Social Security in the last 12 months and what it means for your check. The Social Security Fairness Act eliminated the WEP and GPO, restoring full benefits to millions of public sector retirees and their spouses. If you worked in government, education, or public safety and have not seen an updated benefit, call SSA now. The One Big Beautiful Bill created a new $6,000 federal tax deduction for Americans 65 and older, available through the 2028 tax year for individuals earning up to $75,000 and couples earning up to $150,000. But both of those laws cost the Social Security Trust Fund money it did not have. And the 2026 Trustees Report now projects the OASI retirement fund depleted by 2032, with an automatic 22% cut to every check if Congress does not act. Full retirement age is now 67. For everyone born in 1960 or later, claiming at 62 permanently reduces your check by 30%. The maximum benefit in 2026 is $4,152 at 67 and $5,181 at 70. The earnings limit for working beneficiaries under full retirement age is $24,480. Exceed it without reporting to SSA and you will receive an overpayment notice. Medicare Part B now costs $202.90 per month, automatically deducted from your Social Security check. If your income changed since 2024, appeal your IRMA surcharge with Form SSA 44. SSA did not send a personal letter summarizing any of these 6 changes. Every one of them took effect quietly. Every one of them affects your monthly income directly. Now you know all 6, and you know exactly what to do about each one. Subscribe. Share this with someone you know on Social Security, especially anyone who worked in public service, anyone who is still working while collecting, and anyone approaching the decision of when to claim. And I will see you in the next one.